Hi everyone, it's David here. Welcome back to Republik Labs. As we end this year, we want to share some interesting insights from Delphi Research. They shared a couple things and several projections for 2026. And so we'll talk about markets today. And next week, we're probably going to talk about apps and infrastructures. Let's go. So if we talk about macro liquidity, that has constrained crypto over the past 2 years, it's beginning to reverse. And so they share a couple of charts here showing that, after draining $2.4 trillion since 2022, the Fed ended QT on December the 1st. And combined with acceleration of rate cuts and then throughout 2026, macro conditions become normal and not tight, and it is not the rapid liquidity expansion as we have seen of 2020, but it is a positive flow for crypto compared to the environment since early 2022. And so global M2 has crawled back to all-time high, and the question now is, can BTC follows? The Fed is one large component, but China also plays a role in expanding liquidity support. And historically, China's central bank has been a stable driver of BTC cycles, and when US liquidity is somewhat stagnant, China helps lift it. So the main point is that they say liquidity will begin flowing back into the financial system in 2026. Central banks have purchased more than 600 tons of gold in 2025, and Goldman Sachs forecasts that the average of purchases is going to be around 70 tons per month throughout 2026. According to data, China's central bank is one of the most consistent and largest buyers globally. And the market may not get a liquidity injection or spray like 2020, but macro conditions are cleaner and more predictable as central bank policies begin to converge, and deficits push debt monetization further. In 2026, the US will focus on fiscal stimulus coupled with rate cuts and a weakening dollar. Industrial production and domestic capital investments are the other priorities, and China will continue stimulating and subsidizing industries such as robotics, advanced manufacturing, minerals, rare earth, renewable energy, and will push to catch up in AI chips and computing. The US business cycle itself is relatively stagnant without the big tech. Lower rates, fiscal spending, and policies such as One Big Beautiful Bill form a combination that triggers growth in industries like AI, robotics, energy, and large-scale power infrastructure. And so 2026, as we see macro is going to transition, it's probably signaling a revival of business and economic growth, not a recession, especially with looser monetary policy and expansionary fiscal policy. So this environment is highly favorable for equities and BTC. Many future technologies are competing for investor attention and capital, and so outside of crypto we can see, for example, AI and robotics, explosive growth over the past 2 years, private investment reaching nearly $35 billion in 2024. Robotic startups alone raised more than $2 billion in Q1 2025. Solar and batteries, the technologies are now economically competitive. Solar panel costs have decreased, and lithium battery storage has become better and cheaper. AI is driving the demand for these, sustainable natural resources. And then you can see genetics and bioengineering as well, projected to grow to $40 billion by 2034, supported by some clinical successes and commercial potential. Several pharma companies have attracted funding in the hundreds of millions to billions of dollars over the past 18 months. Crypto is not the only future technology seeking liquidity, and so you can see many alternative investments, and we can just look at the comparison between crypto-related equities and altcoins over the past 2 years. Crypto equities have outperformed the majority of coins or tokens. Institutions are interested in ETFs, major ones such as Spot BTC and ETH, but also equities such as Coinbase, Galaxy, Circle, or Robinhood. And more crypto companies are expected to IPO in 2026, including Kraken and Securitize. Beyond the obvious BTC and major players like ETH and Sol, many altcoin narratives are emerging, such as the revenue meta with Hyperliquid and Pump Fund, which has driven Launchpad and Perpetual DEX wars, and more recently, the privacy meta with Zcash. And so over the past month, essentially since the 10th liquidation, if you remember, on October, every token except privacy tokens have been negative. The crypto market is driven by flows, momentum, shifting attention, and the reason is that it is still an immature market and lacking a large base of long-term investable assets. Additionally, also demand exceeds supply. Crypto token supply has exploded, but demand is insufficient. And over the next 12 months, you can see an estimated of $3 billion in major token unlocks coming, dominated by Hyperliquid at the end of this year and Monad at the end of next year. Starting 29th of November 2025, Hype unlocks 9.9 million tokens. That's roughly at current prices $300 million, making it one of the largest unlocked risks. And in the first half of 2026, you see Ondo and Pith unlocking more than $1 billion in token, and another $1 billion from linear vesting schedule, such as Sui, Arbitrum, Stocknet, and many others. Token unlock supply pressure may peak in Q1 2026, and after that, only Monad in late 2026. The debt market is major trend entering blockchain. DeFi historically has been over-collateralized, and on-chain DeFi protocols such as Aave and neobank startups like Plasma and Avicii are legitimate challenges to the traditional banking system. Aave's peak TVL, over $50 billion, places it among the world's top 50 commercial banks, even surpassing Barclays and Everbank. And Aave will continue dominating the over-collateralized on-chain market, but there is market opportunity in under-collateralized lending. DeFi platforms like Maple and Centrifuge are growing, with deposits expanding into the billions of dollars. And for on-chain debt markets that rely on under-collateralized assets, so relying on reputation, audits and transparency are essential, but the key issue is privacy. And so one solution is zkTLS, which is used by newer protocols such as 3Chain, relatively small, a TVL of only $40 million, but you can see it as an interesting trend to look forward in 2026. The stablecoin trend continues, with more than 300 stablecoins growing, and Klarna just announced one. Because of all these, Sky, previously Maker, created OBEX, a $37 million incubator backed by Framework Ventures, Layer 0, and the Sky ecosystem to pursue high-yield stablecoin opportunities. And so this includes not only traditional RWAs, assets like T-bills, US treasuries, yielding, but more also interesting assets like commodities. You can talk about energy infrastructure via solar or batteries like what Daylight is doing, but also computing via GPU or data centers, AI like USD AI is doing, and other things like fintech and corporate loans and other commodities. And so the year 2026 will bring a more professional market for crypto and blockchain assets integrating real-world assets, RWA tokenization. So what do you guys think? If you liked the video, give it a thumbs up and subscribe to the channel. Thanks for watching, and I'll see you guys in the next one. Cheers.